Welcome to my first post of the free complete beginner's guide to getting started in the stock market. I have created an investing playlist before. It's called Value Investing Basics, and I'll add the link up here. But the thing is, from the feedback I've had and from what I've seen from other videos, a lot of beginners in the comments are saying how even though it's for beginners, they just struggle to follow along with it because there's a lot of jargon and even still a lot of concepts which they haven't heard of. So I wanted to change that here. I wanted to create a series from start to finish, going right to the absolute basics and hopefully trying to get you from being zero to completely knowing what you're doing and knowing how you can actually jump in and start making money of the stock market. So this is going to be the first video of 12 and they're going to get progressively more deeper into the stock market. So this first one is going to be basic. It's going to just dive you into telling you what the stock market is and how stocks work, and by the end of this lesson I'm going to jump in and let you know how you can actually make money with the stock market. So that's the main takeaway you'll get from this video. And then progressively, through the rest of these 12 videos, they'll get a little bit more in depth and deeper into the stock market. By the end, hopefully you have a good understanding of how the stock market works, when you should buy stocks, when you should sell, and how you can make money with the least risk possible. So I hope this can be a benefit of you, and I hope it can really bring it to the level to help an absolute beginner get involved in the stock market. I have helped and taught a few people before, so I hope I've got a bit of knowledge about this and I hope I can guide you through in the right direction. But if you ever have any questions, feel free to ask in the comments below. I'm very active on there and, you know, I care about you, I want to help, so if you have any questions, just ask and I'll get back to you for sure. And of course, if you subscribe, you'll be able to follow along with these 12 videos. So you can keep following along with this series and what I can teach about the stock market. And of course all the other financial videos I do with this channel. So without further ado, let's get straight into it, into the course. So first things first, you need to understand what actually is a stock and what is the stock market. A stock is the market's representation of a business. So a business wants to go public and give out some of its shares so other people can own it. So for example, the stock for Tesla, TSLA is their ticker symbol. And this is where Tesla gives out a percentage of their company for just average people like you and me to buy, so we can own part of that company, and if the business grows, so does the share. So as I mentioned there, a stock is made up of lots and lots of shares, and each share is a representation of a tiny percentage of that stock. So the more you invest into the company, the more shares you buy. I think the best example I can have of this is, I used to own a company called Merlin Entertainments. They're a UK company who used to own Thorpe Park and Legoland and the London Eye before the Lego company bought them out. But this one time when I was walking into London, I had finally gone up to London and I'd seen the London Eye. I was with my friend. And it's quite cool to see this. I pointed out to him like, hey, I own a bit of that. But then they very quickly brought me down to earth and said, yeah, it's probably about a bolt there. Because obviously I own a small percentage of it. I owned a few hundred shares at the time. So that's probably the equivalent of just a small percentage of that company. But the cool thing is, you can jump in with just a few dollars just to buy a few shares if you wanted to. And then this goes all the way up to these big corporations who are spending millions and millions of pounds buying larger percentages of that company. But the cool thing is, your 4 or 5 shares in that company is worth exactly the same value to them as these big corporations' 3 or 4 shares in that company. So if the company you own shares in goes up in value and does really well, then so will your stock. So essentially, the best way to think about it is, owning shares in a company makes you a part owner of that company. It makes you a shareholder. And this is a valuable asset. If perhaps this company does really well and it starts to really increase its profits, then more and more people will want to buy shares in this company because they know it's doing well and it's going to do better. This means that the share price will go up. But obviously it can go the other way. Sometimes bad news happens in the company. Also, lately with all this lockdown and stuff like that, it has caused a lot of businesses to struggle. So this means that their value will go down because their profits are obviously decreasing, so less people want to hold their shares. So perhaps a cool example would help here. So there's a company I've been investing in lately called Wizz Air. It's a Hungarian airline. It trades on the UK stock exchange. But obviously being an airline company, they've been hit really hard during this lockdown time because transport hasn't been able to happen anywhere really right now. So whilst I'm editing this video, I'll flick up a chart which you'll probably see now of Wizz Air. And you'll see that during the virus situation happening, that share price decreased. Because obviously investors are seeing that profits for the future are going to go down. So the share price dropped. And now that things are starting to look up and getting better, you'll see that share price has been increasing. And this is because investors can see this, and they know that profits are going to go up for this company. And now Wizz Air is getting close to their normal share price from where they were before the virus started to hit. So, the cool trick is with stock market investing, if you're able to find these good companies that are going to do well, if you manage to buy them at a cheap price, and then hopefully they go up in price because they are doing well, and then you can sell them at that price, then you'll make a good profit. This is called capital gains, and is one of the two main reasons for making money in the stock market. So, along with capital gains, the other way you can make money of the stock market is through dividends. And dividends is essentially a payout which the company makes to you, as you are essentially an owner of the company. It's a share of their profits. Now, dividends vary from company to company. Some stocks of a company will pay a very low dividend, like Next, a UK retail company, who has a dividend of about 0.8, or even 0, like Facebook or Google. And then some companies will have a much larger dividend, between 5 to 8% or even bigger. For example, the UK insurance company, Legal & General, or Walgreens in the USA. And that's how much you make yearly, on top of the capital gains that you may make from that stock. Dividend is paid out, normally cut up into quarters, and paid out to you quarterly. So once every 3 months. But hold on there, before you jump the gun, I know it's very easy to predict that the higher the dividend, the better the stock then, surely. Because if you pick a 10% dividend stock, you're going to make 10% a year anyway. Well, before you say that, you should think. Because these companies are obviously paying a high dividend for a reason. These are normally larger companies. Companies that aren't going to grow as fast. So they've had all their growth, and they're kind of just on a steady line. So to make sure they're keeping investors interested, they have to pay out these dividends. And this is why they do it. So generally what you see with the higher dividend payers is that you'll get a slower amount of capital growth. But the good thing is they are bigger companies, so there's normally a little bit less risk involved. And with these smaller dividend payers, and even no dividend payers if you're looking at Facebook or Google, or a lot of these smaller stocks, you'll notice that instead of paying out their dividends to the investors, they're keeping hold of their profits that they make, and they're reinvesting that back into their business. So hopefully they can grow their business faster. And that will mean that their profits will go faster, so more investors will jump into their company and make their price go up. So this will mean that you'll make more capital gains, hopefully, rather than dividends. So that means there's two main types of stocks that you look out for too. There's dividend payers that are a little bit more steady in general, and you'll make more money from dividends. And then there's the growth stocks, like these early stage tech companies or Tesla or something like that, who don't pay a dividend, but they reinvest their profits so they can hopefully grow faster. So those are the two main ways, obviously. There are a couple of other ways which are worth mentioning, but I'll mention them to you a little bit later on, because they're a lot more risky, and they're a little bit more confusing. So those are the main lessons I wanted to teach you from this session. And I hope from this lesson you've gathered this, that a stock is the market's representation of a company. And these companies offer out shares, which are a small percentage of their company. And when you buy these shares, that essentially makes you a part owner of that company. The value of these shares can go up or down based on how valuable they are to prospective investors. If the company is doing well and the profits are going up, so will the price of the share go up. And that will mean you can sell at a higher price and make capital gains, which is money-making method number 1 of the stock market. And obviously alongside capital gains, you have dividend payout, which is a share of the profits the company will give you as part of the shareholder. These dividends are different between company to company, and as you've learnt just earlier, that there's varying reasons why a certain dividend is paid out. The higher the dividend, generally the larger the stock, and the slower the grower they will be, and the smaller the dividend, hopefully the faster growing the company is. So I hope this helps you to just understand what the stock market is and how money is actually made in the stock market. I hope it's given you a bit of clarity to understand what it's all about. If you do have any questions though, if there's anything murky and I didn't quite explain anything right for you, then please do ask them in the comments below. I'll be sure to get back to you. So in the next video, I'll be jumping in a bit more into actually looking at specific stocks, where we can find good stocks to look into, and jump into the first few ways you can actually understand the share price of a stock and how it's actually looking. We'll have a look onto Yahoo Finance and actually looking at a few stats and figures and seeing what makes a good company to invest in. So I hope this sounds interesting for you, and I hope I've whetted your appetite for investing in the stock market. because it really is a great way to make money out of the money you already have. And the thing with investing, if you keep investing in money and even reinvesting it, eventually your profits will grow to really significant amounts. I've done a few videos already on my channel about the compound interest and how it really grows your wealth over time. So please do subscribe to this channel, where you can follow along in the next 11 videos of this series, which will progressively get deeper and slightly more difficult in understanding the stock market. But by the end you should have a good understanding of which are good stocks to invest in, and when you should be buying and selling these to get maximum profit. So thank you for watching. If you have any questions, let me know. If you have any feedback, also let me know. I want to make these videos as best as possible and just give you the best content I can out of this. I think there's really a missing sort of area from a complete beginner to actual growing to having a solid understanding in the stock market. I don't think there's enough of that on YouTube unless someone's having to pay for a course, which I don't think is fair, so I hope this free content is going to help. And if you want to see more, then please subscribe, and I hope to see you in the next video.